Whether Monday was the market bottom or not, I bet you didn't feel like it was. We discuss what makes a market bottom this week. So we've been talking a lot about feelings lately, and we're going to do it a little bit more this week, but from a slightly different angle. As the markets were down Monday morning, had a few conversations with people where heard something along the lines of, oh, this just doesn't feel like a market bottom. And of course, I've heard similar sentiment during periods of volatility any number of times over the years. So I want to unpack again, what does a market bottom look like? What should it feel like? And what are some of the patterns, again, that we as investors can get stuck in if not for the right principles and partners help and guide us? So what does a bottom feel like? Well, when people say this doesn't feel like the bottom, what they're really saying is this is scary. There's usually a lot of headlines going around the world. Again, I think they influence markets less than people believe they do. I think they're always there, and we grab them when it's convenient to create the narrative we want to try to explain things. The crowd is usually pretty scared, pretty pessimistic. And lastly, they're selling. People are saying you should get out, right? Whether that's your buddy or the person who's on the news. What this does then, and point number one, is create a path to underperforming. What does that path look like? What is this pattern that develops? Number one is somewhere near a market bottom, you hear things like, things are awful, I should get out. You can fill in a lot of different things, from wars to economics to pandemics. There's always a reason for people to be fearful. Point number two, or step number two then, is the market begins to have its new ascent. And the common sentiment, again, from people like, oh, this is just a head fake, followed by the market returning to new highs and headlines trumpeting it, at which point then the investor says, maybe it is a good time to get back in. And of course, corrections coming along every 18 months, you're just around the corner from having another 10% correction that freaks people out. And you rinse and repeat this cycle, and it's how the 10% market return that one can get quickly becomes into the 2 or 3 that statistics show time and time again retail investors get. So where are things now? How do we know what a market bottom might feel like? My number one advice is don't try to time a market bottom. Just look again for a good entry point. And again, we're not going to change our feelings. You're not going to change how the market bottom feels like. It feels crappy. That's how they're always going to feel. It feels scary. It feels like a mistake to take your hard-earned money and buy something when all you see is red on the screen. That's how it is. We're not going to change those feelings, but we can change how we react to them. We can take that indicator of, man, I feel like X, and tie that to a specific action, i.e., this is probably the time to be getting in. When things are great and you can only see blue skies, that's probably the time to take, again, a little bit off the table. So what should a market bottom feel like? Well, again, it feels bad. And how can we look at this? Can we look at some indicators? There's some stuff in the written commentary. I've been sharing them. One of the things we can look at, again, is investor sentiment. I mentioned up above, the crowd's scared, the crowd's selling. There are ways to measure this, whether it's the VIX index, whether it's survey data that's out there, and some interesting patterns start to develop if you're looking at it. If you look at the chart again that's in the commentary, you'll see that right now the number of bearish investors just surpassed bullish. Every time those crisscross is usually a pretty good indicator that we're somewhere near a bottom. If you go back again and look at previous dates, it's things like 2008, the election of 2016, COVID 2020, things that were near-term market bottoms, and in hindsight, wonderful opportunities to get some money to work. The next thing you can look at is cash levels. I mentioned point 3 up above is the crowd is selling. You can look and monitor that. Cash levels right now, peaking just under 6% amongst institutional clients. Again, near the highs in terms of cash levels that you see around other lows and bottoms in the market. Lastly is look at relative value. One of the things people don't understand, you get into these situations, you've got all this cash, what happens next? That cash needs a home. It's only going to stay in cash for so long. It needs a return, and so it starts to sniff out, and this is really the issue. Not that it knows how the situation in Russia and Ukraine might end, not that we knew what to make really of COVID on March 23rd of 2020. What it starts to look at is the relative risk-reward setup between all the various things out there. One metric, not the sole and only metric you should look at, is what is the earnings yield, the dividend divided by share price, compared to the treasury yield. And if the earnings yield's higher, it's a relatively better long-term investment. Right now, it's well over 5%. Treasury yields are at 2%. That would tell you, if you've got time and you can have the stomach, it's a great entry point to probably be getting some money back to work. So in closing, what makes a market bottom? Well, what makes a market bottom is not that you can see the light at the end of the tunnel, that things are starting to feel better. That's when the market bottom is somewhere far in your rearview mirror. It's when sentiment gets bad. It's when there's lots of cash on the sideline. You've got to, again, learn to buck that peer pressure, buck your own feelings, not change them, use them to make better decisions. What makes an opportunity is really keeping these two things in mind. I want to close with this. Number one is investments are only going to give you the return you want if you'll give them the time they need. And secondly, the way to get that time to be able to work through that, again, is during scary periods, not have to rely solely on the platitudes certainly our industry is so well known for, but again, sound investing principles. A process that looks to definitive facts to help guide it through. And then with that, again, a partner who's willing to come alongside you and walk that journey with you. It's what community is about. It's what 10 Capital is about. Speaking of community, I hope you're watching this after you've been able to come down to our March Madness event. Again, the reason we do this is certainly good food and fun times, but it's also about building those relationships, earning that trust, knowing that if we're going to earn the right to have someone listen to us, they need to be heard first. That's what we're going to spend some time doing today. If you haven't made it, certainly hope to catch you next year. Thanks so much.